Well, look, I have been saying now for last 4 or 5 months that interest rates are going to rise. They are. Rising interest rates from the level that they were at does not mean financial tightening. It means that the economy is growing. It means that there is some price increase anticipated. And it means that companies that can benefit from increased prices and increased economic activity are going to also do well in terms of price appreciation in the market. Now, the companies that you were mentioning, the FANG stocks, have already appreciated and have been well bid for quite some time. So it's not surprising that they're under selling pressure, and it's not surprising that companies who haven't benefited from that price increase are now getting the benefit of buyers. So I don't really see this as unusual. I think it's pretty much par for the course in what you would expect coming out of a severe recession, or call it contraction, caused by this this global pandemic. Now, the global pandemic obviously is not something you see every day, but this kind of economic reversion is what we see quite often, and it's not that surprising.
Peter, but is it binary insofar as you're watching some of the FANG stocks come down, you're watching some of that money, that is what the rotation is. The question I'd ask is, given that there's so much money, and again, passive money, et cetera, that's gone into so many of the FANG stocks over time, how much more do they have to come off? Because I think that's a big question for some investors right now who have loaded up.
Yeah, look, that's a good question. And that is, of course, a bit of a guess as to how much more they're going to come off. There has been a very significant rotation. If you look at the difference between high quality, or high valued companies and low quality, that valuation has gotten stretched dramatically over the last 3 or 4 weeks. But I don't think that it's over. I think that we're going to continue to see that rotation, although the speed at which it moves is slowing down. And you're also seeing some differentiation in the tech world, because there are companies that are technology oriented, that are growing, that are still attractive, and investors are going to bid for that. So I think you're going to start to see some differentiation here between those stocks that have just been held by passive money, large amounts of capital because they're well known, and those stocks that are fundamentally growing faster and will be more attractive in the future.
I assume investors are calling you saying where to put my money. So where would you right now, this morning, when you get off this air?
Yeah, I'm not owning bonds, Andrew. That's for sure. I think you got to own equities here, even though I'm sure there's going to be some increased volatility, and you'll continue to see this rotation. But duration is really expensive. It's going to continue to be expensive, and it's not clear to me that credit spreads are going to tighten so much. They're already pretty tight. And you're not likely to get a huge amount of tightening out of credit spreads.
But are you going to go into the Russell? I mean, what kind of stuff are we talking about here? You like banks now?
Well,
has all that already moved?
If you're buying in the market, I think first of all, if you're going to buy stocks individually, if you're an individual investor looking to buy stocks, it's going to be difficult, because you need a lot of fundamental research here to decide where you're going to put your money. You could buy banks, but banks are up a tremendous amount. They're up, call it 30%, 28%, just in the course of the year. The spread between, large bank stocks and, for example, the FANGs, is 30, 35%. Buying banks here, they'll probably go up some more, but you're certainly not going to get the increase that you've seen in the last, 3 or 4 months. So I don't know. I wouldn't be buying banks. I think it's tough. I think you got to look for high quality companies that are sort of compounders, that can show growth in an economic recovery, that haven't been that highly valued. That's where I think there is opportunity, and I also think there's opportunity in some of the tech names that also have dramatic growth that are still going to have attractive valuations.
Shepard Smith here. Thanks for watching CNBC on YouTube.